Hello, good day. I'm Chan here. I'm back again. And today I'm going to take a deeper dive into why I believe that Shanghai Gold Exchange and her subsidiary, Shanghai International Gold Exchange, would likely play an important role in moving forward, helping the rest of the world to de-dollarize. First, let me introduce you to the three most important gold exchanges around the world. The first being the London OTC market, the second being the COMEX or the Commodity Tradings Inc., and the third being Shanghai Gold Exchange. The short for Shanghai Gold Exchange is SGE. The largest purely physical spot exchange in the world is actually Shanghai Gold Exchange. The gold derivatives and futures contracts dominate the London OTC and COMEX exchanges. The paper market itself, which are the derivatives and futures contracts, will be the Achilles heels of COMEX and London OTC. When the paper gold market collapses, Shanghai Gold Exchange will be the one left standing. There are a number of unique advantages that Shanghai Gold Exchange has. The first being physical delivery, where Shanghai Gold Exchange offers physical delivery of gold, which means that buyers can take delivery of gold that they purchase on the exchange. This is different from London OTC and COMEX. These two exchanges primarily trade in gold derivatives and gold futures. The second advantage is that Shanghai Gold Exchange offers more transparent market with detailed information on trading volumes, open interest, and delivery data readily available to the public. This level of transparency is not always available on London OTC and COMEX. The third is that Shanghai Gold Exchange offers a diverse range of gold-related products, which includes gold bars, gold coins, and jewelry. This variety of products allows buyers to choose the type of gold that best meets their needs. And this is not always available in other exchanges. And the fourth advantage is that the trading cost at Shanghai Gold Exchange is generally lower than London OTC and COMEX. The reason is because Shanghai Gold Exchange is a not-for-profit organization, and its fees are designed to cover its operating costs rather than generating profits. The issue with COMEX and London OTC is that the true price of gold is obscured by paper claims. According to Andy Shackman, the president of Miles Franklin Precious Metals, in COMEX there are 1,750% of paper claims over physical gold. When the prices of paper claims on gold collapses, the gold exchange left standing with any credibility left will be Shanghai Gold Exchange. The scenario of the collapse of the paper gold market becomes more and more likely as more and more investors are calling gold for delivery away from COMEX and London Metal Exchange. What this means is that there are and will be less and less buyers of paper gold as paper gold becomes more and more illiquid. Paper gold has no deposit insurance, so having paper gold holds higher risk of receiving no physical gold in return. More and more buyers of physical gold means physical gold becomes more and more liquid. This is ironic considering that gold is heavier than paper gold. So, will we see a tipping point where popularity for the use of Shanghai Gold Exchange to skyrocket, especially in a stagflationary environment where prices of US bonds and US equities will collapse? The problem of persistent stagflation in the US is that in an economically multipolar world that we are currently in, unlike that of the 1970s and 1980s, there will be accelerating loss of purchasing power now, as there is a global trend to use gold to de-dollarize and protect purchasing power concurrently. Gold has been historically a pretty good asset for protecting purchasing power. And Ghana's inflation rate has fallen from 156% to just over 60% since it began trading oil for her gold. Currently, a lot of wealth is tied up in US bonds and US equities market. The total size of US bonds currently is at 51 trillion US dollar, whereas the total size of US equities is at 40.5 trillion US dollar. A persistent stagflation will result in a negative real returns in US bonds and US equities. Investors will need an asset class that doesn't have negative real returns. So gold will likely be the asset class where investors will flee into, taking money away from US bond and equities markets into gold, which is available for trade at Shanghai Gold Exchange. Moving forward, it will be interesting to watch if the collapse of the US bond and equity markets will result in a surge of money pouring into the Shanghai Gold Exchange and Shanghai International Gold Exchange for the transparent trading gold market. So, could we see a tipping point where popularity for the use of SGE will skyrocket, especially when US bonds and US equities markets collapse? That's it for today. If you like this video, please click like and do subscribe to my channel for periodic updates. Thank you.